I really hope that this is insightful and is useful to you guys. So in a couple of seconds, we'll get right into it. Seen any late people hopping in?
Yep.
Cool.
All right, we ready to go?
I think we are. Yeah, we got Brian here. What's up, Brian?
Hey, what's up?
What's up? Cool. Yeah, we can get started whenever you're ready, Andy, to start recording.
All right, we can begin.
All right, we're good to go.
Cool. Okay. Once again, everybody, hello. Happy Saturday. I'm just, again, super thankful for you guys coming out, especially at this time. Today, we're going to focus on our second part to Intro to Technical Analysis. And to actually start us off for this evening will be ours truly, Mr. Licknack.
Yes. Hello. Thank you, Logan. All right. So, as Logan said, we do have some very good topics for you guys today. And what we're going to be focusing on for this entire presentation, we're going to be really dialing in on Fibonacci extensions and retracements, as well as Elliott Wave principle, right? Because I know this has been a kind of a high demand topic lately, and a lot of people want to know more about these things. So hopefully by the end of today, we can you'll leave here a little bit smarter. So without further ado, let's hop into it.
Another thing is, I want to add on.
Yes.
If the stream gets full, we have other mods streaming as well. So join their stream because they're streaming the exact same thing. So don't worry if you can't get in the stream.
Cool.
Awesome. Thanks, Andy. Yep.
I also really wanted to just piggyback off what you said, Austin, because I think these two topics really are important, because these are two topics that you and I and some of the other analysts use every single day and rely upon very, very heavily.
Every day. Yep. It's one of the biggest parts of my investing and trading routine. But without further ado, the first thing we're going to be hopping into is the Fibonacci sequence and really just the origins of it, right? Because, we could go and show you how to apply these tools on the chart fairly easily, but, the analyst here also feels as though that it's important that you understand the history behind these things and kind of where they came from. So if you don't know, the Fibonacci sequence was created by Leonardo of Pisa, or originally named Leonardo Fibonacci. All right, he was born at around the 1170 area and died around 1240. He's the medieval Italian mathematician who wrote Liber Abaci. Right, this is the first European work on Indian and Arabian mathematics, which originally introduced Hindu Arabic numerals to Europe. Right, and this was kind of the first, this is what kind of made Leonardo relevant to the time, and this is kind of where he first had the opportunity to showcase his findings, which is the Fibonacci sequence. Yep. You can move on to the next slide. Yes. So if you're wondering what the Fibonacci sequence is, it's actually not too hard to comprehend. It's just a simple sequence of numbers where the previous the next number is the sum of the previous two numbers, right? So you can see the example of the sequence right there. It goes from 0 then to 1, right? Because 0 plus 1 is 1, and then 1 plus 1 is 2, 1 plus 2 is 3, 2 plus 3 equals 5, 3 plus 5 equals 8, etc., right? And then if you were to describe this in a mathematical equation, it would look something like the equation that you see in the bold down below, right? So that's kind of what this sequence is based off of, right? This series of numbers kind of that you see in front of you, and this obviously goes on for infinity, right? So after going over the sequence, what makes this important? Well, the truly amazing part about the Fibonacci sequence is its reliability to show up in virtually all assets or facets of life, right? It's often based off of a perfect spiral pattern, right? That's often what you can notice the Fibonacci sequence to be found in, right? This spiral arrangement that follows the golden ratio can also be observed in many areas of life as well, right? And the next slide that we see here will showcase that, right? Okay, so this is really amazing, and this is kind of what I was talking to about Logan before, right? I was saying, we do all this technical analysis, it's great, but it's really truly amazing how many areas of life you can find the Fibonacci sequence in, right? So you can see in the pictures the horns on a ram, right? A seahorse, the waves, how the waves curl, a whirlpool, pine cone, the shapes of hurricanes. Then you goes all the way over to, the human anatomy, our DNA, old Roman architecture, seashells, right? All this stuff, and even our very own Milky Way galaxy, right? So this is it comes down to the case of people saying, oh, maybe we do live in a computer, right? Because by many ways, these numbers can be found in literally all assets of life, not even just these things, but also on a financial chart, right? They can be used to determine targets for stocks and assets and commodities. So it's really amazing the origin behind all this stuff, and looking at this stuff is truly pretty compelling in my opinion. So we can go to the next slide. And yes, so why do we use it other than to make life connections? We use Fibonacci tools for two major purposes, right? To find relations within Elliott Wave principle, which we will be discussing in just a moment, and also to find high probability points of reversal, right? So this is what we use to foretake profits, and as well as identifying the end of corrective waves, right? And we'll go into what impulse and corrective waves are in just a moment. So yeah, that's kind of just the quick background on Fibonacci. And these are the numbers that are significant, right? So when you're doing a Fibonacci retracement, which would be to determine targets to the downside or reversal patterns to the downside, we typically use the 38.2, the 50, and the 61.8. When we're looking for targets to the upside, we typically rely on the 1.272 as well as the golden ratio, which is the 1.618. So yeah, those are the very significant areas that we pay attention to when applying the Fibonacci retracements and extensions. Yes, and we will go into more examples of that.
Cool. So before we move into more examples, Austin, first of all, thank you very much. That was an awesome part of your slideshow, and I really, really enjoyed it. So Fibonacci is a fantastic topic that we could talk about for literally hours on hours. But we really wanted to dive deep and deliver as much value as possible for you guys in this short time we are here together. So Elliott Wave principle is our next subject for tonight. And so this is a quote that I really liked from the book, the Elliott Wave Principle, written by Robert Precher, and this quote was directly from Ralph Nelson Elliott. Because man is subject to rhythmical procedure, calculations having to do with his activities can be projected far into the future with a justification and certainty I don't even know how to say that word, heretofore unattainable. So now we'll move more into really what is it? The wave principle, which was noticed first by Ralph Nelson Elliott, is discovery that social or crowd behavior trends and reverses in recognizable patterns at its bare bones. Mr. Elliott then cornered 13 patterns of movement, or also known as waves, that recur in market price data and are repetitive in form, but are not necessarily repetitive in time or in amplitude, as we will see in the next part when we go over the rule of alternation. The market is comprised explicitly of actionary and reactionary waves. The impulsive waves that we are looking for are the actionary moves, and the corrective moves are also known as reactionary. So now that we know what is it, the real question comes to why. Mr. Elliott's descriptions constitute a set of concrete, empirically derived rules and guidelines for interpreting market action. And my reasoning for why is rules and guidelines. This is something that I really like. If we know exactly how to spot something based on rules and guidelines, you can analyze your performance and execution based on the rules and guidelines that are given. So, rules cut out the variable of market performance disturbing individual portfolio performance. If you break a rule, you're wrong, and therefore you lose. And a little bit more on that. Although it is the best forecasting tool in existence, and yes, I do firmly believe that, the wave principle is not primarily a forecasting tool, but also is a detailed description of how markets inherently behave. Elliott Wave principle, as I abbreviated EWP, provides human traders the number one edge that we hold over computer-based algorithms and high-frequency traders. That is market context. Elliott Wave principle is the single best theory to accurately showcase market context and how you can therefore capitalize on it. So we'll go into the 5-wave impulse, which is the universal, most basic pattern. 3 of the waves, which are labeled 1, 3, and 5, the first wave, the third wave, and the fifth wave, are our actionary waves, which we spoke about previously, or the impulse waves. These are separated by 2 counter-trend interruptions, also known as the reactionary waves, which we just touched on, and these are labeled waves 2 and waves 4. So this overall pattern, waves 1, 2, 3, 4, 5, are called the motive wave. Now, we take that motive wave, and we bring it together with the 3-wave corrective move. This completes our complete cycle. So just as waves 2 and 4, which we just touched on, are corrective waves of wave 1, 3, and 5 in the motive move, we will see that there is an overall correction of that entire move, which is our ABC corrective wave. So each 5-wave impulse move is followed by a 3-wave reactionary or corrective move. And this will really come together when I show you guys a picture of this. here is the 5-wave impulse. Remember that first part of our complete cycle. As you can see, you guys can see my cursor, correct? Confirmation from anybody?
Not at the moment.
I don't believe we can.
Okay, well, either way, you can see wave 1 here, our first wave on the left. That is one of our actionary waves. Wave 2, which follows wave 1, is our reactionary wave. Wave 3 is an impulse move. Wave 4 is a counter trend or reactionary move. And wave 5 completes our 5-wave impulse as an actionary move. Now, here is the 5-wave move with the complete cycle. Its counterpart, the 3-wave ABC corrective move. So as you can see, we have one overall trend, the 1, 2, 3, 4, 5. And right after that, we have a corrective wave, which plays out as an ABC. And once we go onto the charts, I'm going to show you 2 different types of ABC corrective waves. So in Elliott Wave theory, you're going to be asking, okay, cool, now we know what is it and why, but how do we trade it? There are 5 ideal locations in the overriding wave pattern for high probability and, more importantly, high risk-reward trades. These areas are the end of wave 2 to trade for wave 3, the end of wave 4 to trade for wave 5, the end of wave 5 to trade for wave A, the end of wave B to trade for wave C, and the end of C to trade for wave 1. And this will make a lot more sense when I show you a picture. So here in the blue is highlighted the potential trading opportunities. As you can see, we have the completion of wave 2, our corrective wave. We enter in on the corrective wave, anticipating our next impulse, right? Wave 3 is the most impulsive wave out of the pattern, so wave 3 is the best wave to catch when you're looking at risk to reward, right? So in highlighted at the bottom, you can see wave 2, there's a potential trading opportunity. At the low of wave 4 is another potential trading opportunity. The same thing, right? We're entering on a corrective wave, looking to catch the next impulse. And then we have wave 5 to wave A, and wave B to wave C, as well as wave C to start our next 5-wave impulse move, right, as a continuation with wave 1. So here's a tool that I'll talk about in more once we get into some of our examples. But the rule of alternation, which we actually use quite a bit, states that one wave will only be half of the time and distance as the preceding corrective wave. And this is only found in the 5-wave impulse move. This is not found in the ABC corrective pattern. This means that if wave 2, as showcased in the last example, retraces to the 38.2 Fibonacci retracement, as Austin was saying, of wave 1, then wave 4 would retrace to the 61.8 Fibonacci retracement of wave 3. The opposite would stand if wave 2 reached the 61.8 and wave 4 would reach the 38.2. So this will make a lot more sense when we go into the examples, but obviously that means if wave 2 is longer, wave 4 will be shorter, in a much simplified version of it. So this is the end of our slideshow. We're actually going to move right over to TradingView. And first, we're actually going to go over Austin's examples. So we're going to bring up this S&P 500 chart.
All right, thank you. Yeah, Logan, that was an awesome explanation behind Elliott Wave. So I just wanted to thank you for that. And I also wanted to touch on Logan before he went into really the ins and out of Elliott Wave. He did mention a quote by that Ralph Nelson Elliott, I believe, made, or somebody that wrote the book made, and it really compelled me, right? So I made this chart. And the quote, right, if I just want to remind you guys, I have it right in front of me. Because man is subject to rhythmical procedure, calculations have to do with his activities can be projected far into the future, right? That's just a snippet from that quote. So what I did here is I took the S&P 500 pretty much since its inception, right, around the 1860s to the 1870s to present day. So I normally would have candles on this chart, but I had to use a line chart just because it's a little choppy on the earlier side. But typically right now I'm using a 2-month chart. So if you scroll, go up a little bit, Logan, so you can see the time. If you just go up a little bit, like bring the chart up, so it'll be on the bottom. Nope.
Like, can you not see the time?
There it is, right below. See the 150 years, 55,000 days. Yes, so that's the time frame of this chart, right? 55,000 days or 150 years. So this is a lot of time that we're looking at in front of us. And what we're going to do here is we're going to acknowledge the wave counts that we have in front of us, and we're also going to acknowledge the historical correlations with events, right? Real life events. So obviously, Logan, if you just want to jump from the first one right there, that is where we're starting, right? Post-Civil War, the start of economic expansion and industrial development, right? That's what really started that first impulse wave that later led into other life events. So Logan, if you want to continue moving to the next one, that was actually the start of World War I. So right after we completed our third wave with all that growth, we actually ran into a major world event, which would be World War I, which led us to our fourth wave, right? That kind of brought down the economy, maybe due to fear and some other aspects, right? Could be very subjective, right? There's a lot of reasons as to why the economy may have gone down. But then we quickly entered into our fifth wave, which if you guys didn't know, the fifth wave can often be very impulsive and can actually be longer than the third. It's not typical, but this can often happen. And that big impulse wave for our fifth wave was actually the Roaring 20s, right? This was the time when we saw automobiles become popular. Most of the houses in America started to have electricity. We saw the mass production of home appliances, right? A lot of great things were happening in the economy, and that's why we saw that major pump to complete our macro wave 1. Okay, so what happened at wave 1? That is the start of the Great Depression, okay, in October 1929. And you can see it was pretty devastating to the economy. We actually went down, to one of our lowest points ever. And, there was a lot of bad things that came out of the Great Depression. And we still look back at it as one of, the worst financial times in history. But we did quickly rebound. And that is when we quickly ran into more problems, which would be the Roosevelt recession. Now, obviously, these things are very subjective, and the Roosevelt recession is not often talked about, but it is a very significant part of American economic history, right? If we are trading the stock market, the S&P 500 is based around these things. So Roosevelt's recession, if you guys didn't know, just some background on that, it was a cutback to federal expenditures, and they wanted to stop spending so much. They diminished government spending, and that ultimately led to the bottom, of our wave 2, right? And then obviously from there, we went into more historical events like the start of World War II, right? And then if you guys didn't know, World War II was actually very beneficial for the economy, and it makes sense as to why that would be at the start, or really around the end of wave 2, right? Because that really kickstarted our massive third wave pump, right? So that obviously was then catered by a bunch of other events. Oh, we do have an echo. Okay. But yeah, no, continue, Logan. So what's the next one we got there?
I just want to make a quick note. It's actually really interesting that you brought this up because this was the start of World War II, right? But remember that the U.S. entered in a couple of years after everybody else. So right around the time that Pearl Harbor happened, this is when we actually started our wave 3.
Very interesting, right? It's amazing. And then obviously we ended World War II. Maybe the end of World War II could have paused the stimulus for the S&P 500 or, the SPX at that time. But then, we quickly, we carried on that momentum, and then we found ourselves, going up into the 50s and the 60s, where we saw, the founding of the Standard & Poor's 500, or what we know today as the modern day S&P 500. So that's obviously a major moment in financial history. If we keep on going, right, during this whole entire time, it's very, very bullish. If we look, the economy growing at an exponential rate from World War II, we can see that with the baby boomer generation. A lot of people are having kids. A lot of money is being stimulated into the economy. If you move over to the next one, Logan. There you go. Major government spending on roads and interstates, right? We can still see this third wave is pushing. There's a lot of bullish events happening that are causing the overall growth of the economy to be very apparent. If we keep on going over there, and you can start going through these rather quickly. In 1971, that's a pretty significant moment. That's when the U.S. left the gold standard. Nothing really major happened immediately from the economy, but we did see some ripple effects later on, which I'll talk about. And then there we see the completion of our third wave in the stock market's history, which kind of concluded with the commodity crisis, or in the 70s, the oil crisis and the steel crisis, right? So a lot of commodities were extremely scarce, and gas prices went through the roof, right? So that was not good for the economy. And then obviously, and this is what I was talking to Logan about prior to this presentation, but one of the most bullish times in history was actually the start of the home computers, right? When computers became accessible to everyday people. Computers were invented well before the 1970s and 1980s, but around that time when it became accessible to everyone, really promoted economic growth. And then obviously we saw lower gas prices going into the 90s, which made the economy flourish even more, right? So with lower gas prices and the invention of the internet, you see how that's a very bullish recipe, and that ultimately led to the top of wave 3, which is the dot-com bubble, right? And then we went into a massive corrective wave, which then, we did kind of have, I guess you could say, a dead cat bounce of some sort, which, led into the 2008 financial crisis. And then we had a massive correction to complete our ABC corrective wave. And then here we are today, right? Our current day. And the last major correction, last major world event, I would say, is COVID-19. And if you look at COVID-19 compared to some of our other corrections, it's really not even visible, right? So, the economy has been through quite the road, right? And it's very compelling to see how these real world events actually line up perfectly with our wave counts. And I like what you said, Logan. I didn't even think about that, about when the U.S. actually entered World War II was right around the exact bottom of our wave 2. Within our wave 3. So that's pretty compelling, if you ask me. I don't know if you had any thoughts on that, Logan.
Not directly. I mean, I love this chart, right? It obviously syncs up very, very nicely.
Right.
That was it. It's just really interesting to think, right now we're in wave 5. It looks like we're either completing wave 1 or going to be completed in the near future. And, we'll then have some type of corrective move, obviously, to form wave 2. But then obviously we'll have wave 3, which is the most impulsive. So could you imagine what wave 3 of wave 5 is going to be like? I'm super, super excited for that time period. Super excited for wave 2, honestly. Of course, it's going to be terrible for the economy, but in terms of people investing, it's going to be a fantastic time.
Yep, there's going to be a lot of money made. For sure.
Absolutely. So we'll move into your ETH chart now.
Yeah. Okay. So, no, there's just a little bit of an echo. I don't know if you have to mute yourself or whatnot. So it's a little small, but it's a picture. Could you zoom in perhaps a little bit? It's okay if not. Oh, amazing. Okay. So guys, I'm sure I've shown this chart, especially if you are present in our live calls that we do Monday through Friday, every day at 3:30 p.m. Eastern Standard Time. But this is an Ethereum chart, right? And this is an example of where I used Elliott Wave principle as well as Fibonacci extension levels to kind of determine some future price targets for Ethereum, right? So it looks fairly complex, but if you take all the data that we said to you, right, and you know what the 5-wave move is, what a corrective wave is, right? You can kind of look at from the beginning and kind of pick apart where the waves belong, right? And you can kind of see it, right? It looks complex when you first view it, but the more you kind of just look at it and isolate the waves, it makes sense. So, Ethereum did have that massive corrective wave, that zigzag pattern, I would almost consider it, after our wave 5. And then, we are in the middle of a 5-wave impulse move, as the same with Bitcoin, as I've been saying for a very long time. But yeah, so I believe if the Fibonacci levels are not showcased up there right now, but the 1.618 level resides around that $9,000 to $12,000 area. So that is predominantly my target for Ethereum. And that's kind of how we would go about kind of forecasting future price targets for an asset like this. And also, as you can see, the other levels there are resistance levels, of course. So, Logan, I'll pass it over to you.
Awesome. Thanks, Austin. This was a really, really clean markup. We actually did this together. I remember we were having a little bit of confusion over this double corrective move we had here. But yeah, that is a zigzag pattern. And it actually leads us perfectly into how I'm going to quickly go over, before we go over this example, I want to quickly touch on 2 really, really important things. And before I even do that, I wanted to stress the importance of these 2 subjects together, right? Because we have Fibonacci and we have Elliott Wave theory. Separately, they're both amazing. But the thing is Fibonacci is a fantastic confluence and a really, really great addition to an Elliott Wave framework. So you have Elliott Wave framework, which obviously works. It's fantastic. But when you combine that with Fibonacci relations, that's when the real magic happens. So utilizing these 2 tools together will be a fantastic confluence for your trading decisions and ultimately yield higher probability and higher risk to reward trading decisions, which is what we're all looking to do, right? So first, before we go over subdivisions, I want to quickly bring up 2 different types of corrective waves, because so far we only touched on the ABC, right? Everybody, I'm sure, remembers this. So we'll just quickly label this as well. And I won't take too long on these subjects, guys, but if you have any questions, I obviously can go deeper. So this is what is known as the zigzag, which is what Austin just referred to on his Ethereum, right? So the zigzag is a 5-3-5 pattern. We'll quickly go into that in a second, but I want to show you the other one. So there's a zigzag. Other than that, there's an A, B, C flat correction, when the wave C is going to reach the extreme of wave A, but not actually go lower like wave C does in a zigzag. So it's flat, obviously. So we'll go over this one. And the main differentiating factor and how you can utilize this in your trading is that they have different wave counts. So this brings us into subdivisions. Subdivisions, I want you to think of, you're looking at it on a higher time frame and you're just dropping to a lower time frame. So we have that labeled. And when you go into a lower time frame, let's just use for an example that this is a 4-hour chart that we're looking at, and this is a zigzag move we're looking. So we can go to the 1-hour chart, and what you'll actually notice is in that 535 pattern, wave A has, as you can imagine, 5 waves, followed by 3 waves in wave B, and 5 waves in wave C. That might bring home the idea of the 535 a little bit easier for you. And I'll color these differently. But this is what subdivisions are, right? They allow you to follow the rules that are set out by Ralph and Elliott and the people who really perfected the Elliott Wave framework, and allows you to really break down what is the true count. Because if you're not utilizing these rules, you could come up with, I'm not kidding, 20 different counts on a single chart. But when you break it down to the individual rules is when you get rid of all that noise, right? You get rid of all of it and you see the real picture that we're looking for. And this is how you know you're looking at the right count, because you utilize these rules. So we'll just quickly label this, but I think you guys get the idea. 1, 2, 3, 4, 5, right? Followed by an ABC move, followed by another 5-wave move. So now I'm sure you can imagine in a flat, we have, since it's a 3-3-3 pattern, right? We have A, B, C, A, B, C, A, B, C. So I really hope that makes sense for everybody. Zigzags, this wave C breaks the low of wave A. Flats, wave C is equivalent to the low of wave A. And the real way that you know this, right, is if you're looking at a corrective pattern and you're looking to trade wave C, you need to identify what is the subdivisions of wave A so you can see, am I in a zigzag or am I in a flat? Because if you're in a zigzag, you can then set your take profits much farther, right? Because you know wave C is going to break the low of wave A. But if you're in a flat and you're trading wave B to wave C, then you're obviously going to have a lower risk to reward trade, because wave C is only going to go to the extreme of wave A. So this allows you to have a more higher probability exit for your trade. So now let's stop drawing on the charts and let's go into some live examples, right? I'll get rid of that later. So we'll go into synthetics. What I really wanted to show you was this zigzag pattern, which played out and yielded, with Fibonacci relations, a fantastic buying opportunity for everybody in the Discord. Because I posted this in my analyst chat when it happened. So how did I get this zone that I said, please buy here? We're going to take the Fibonacci from wave A. Sorry, that was the wrong tool. There we go. From the low of wave A. I actually draw mine backwards, and Austin has this problem with me. I do it because it's just how I've been trained and how I used to use it in some of my patterns. But when you actually do draw it, what you would do is you would start from the high of wave A and then draw it to the low. I draw it opposite because obviously then I'm seeing my extension levels, right? So as you can see, extension levels are on the top. But if you draw it my way, you'll see that the extension levels actually work more for us. So here's the box. It was actually lowered a little bit. It was right here. And then what we did was we took this Fibonacci extension. We also took a trend-based Fib extension, which is a little bit different because you're not just drawing it from point A to point B, but you actually have a point C. So it's the extreme of this wave to the low of this wave to the extreme of the pullback point. So as you can see, this 161.8, as we were talking about, right, we're looking for that 127.2, 161.8, and in some cases, some extended cases, even the 2 level right here. As you can see, we had that 161.8 zone inside of our box. So this is why I labeled it the please buy here box. And as you can see, utilizing the ABC corrective move, we found a fantastic low for the end of wave C. And as one of the potential trading opportunities, you can see we're trading for wave 1. You can ignore all this mess, but essentially we caught wave 1 right here, right? There was a 5-wave move, and this was wave 1. And then we had wave 2, which was an ABC corrective move. If we zoom in, A, B, C, or even A, B, C, followed by the next move. But this obviously yielded a fantastic trading opportunity. If you got in on the zone, I believe I got in around this level. If you traded to the high of wave 5, that's 114x. Let's actually just measure that out in terms of time, right? If you bought here, that is a 14-day period. You made 112x, or sorry, 110% on your money, which is a fantastic trade. So now we're going to go into XRP. So I want to show you guys, which I'm kind of proud of, can't even lie, how I found the high of XRP. And this is proven in the Discord server. Lewis and Spazin can vouch for it. But how we found the exact high. So I'll show you in the 4-hour what it looks like. We had the 127.2 Fibonacci extension and the 61.8 trend-based Fib extension of wave 3 right here and wave 4. This is how we got this zone. And then we have the lower time frame Fibonacci cluster, which is right here, which we got from the same tools. And then this other red box, this larger red box, is another higher time frame fib cluster. When I say fib cluster, I'll actually detail it for you. All I'm saying is we're using multiple Fibonacci tools to come up with our point. So as you can see, this lines up with the line that we have here. And if you draw this, that lines up too. So this is why I put the line there. This is how we knew XRP was going to make that high. And this is a Fibonacci cluster right here, utilizing these tools together. But this is how we utilized it. We knew that we were in wave 3, right? Because as you can see, subdivisions. Wave 1, this was a news candle, I think, so we'll just pop that there. Wave 3, wave 4, and wave 5. And then even if we're going to look at just wave 3, you can even break that down itself. And right here, you can obviously see on the lower time frame, if you're going to break this down, this is an ABC, very, very clearly. So that was how we caught that. And this isn't a part of the exact example right now, but this is actually why I have my thesis that we're going to make a low, because on a lower time frame, this is an ABC move. So that means everybody that's watching, if I was waiting for responses, that we're going to flat, right? So we have an ABC move, an ABC move, and now I'm waiting for prices to retrace. I mean, at least this was obviously related to the El Salvador news. So 90 cents is my extended take profit, or my extended prices that I'm going to be looking for buys, rather. And $1.01 is the low that I will look for in terms of my next re-entries in XRP. So those are my 2 examples. Obviously, we went over Austin's examples. Now what we'd like to do is take 3 specific requests from Andy, 3 live ticker requests, and do a quick TA for you guys utilizing Elliott Wave framework and Fibonacci relations. So in live chat, VC mute, or you could even spit it out in here. Just quickly type in some tickers, and please react to some if you see one you like and you want to make sure we get to that one. But we'll do 3 right now, and then we'll take some questions. Austin, did you have anything you wanted to add while we're here?
All right, we got
Neo.
Oops. No, Logan, you covered everything very well. I think it's definitely time to go into some examples.
Cool. So we'll can we get some reactions to these messages just so we can really iron out the 3 that we want to cover? Because we're getting a couple right now.
So we got Neo. So I'm going to react to that. We got Apple. Let's do...
Yeah, I meant like, can we oh, okay. I see what you mean.
Yeah, so we got Neo, Apple. Let's do some crypto as
We
well.
got 2 on CLF.
And then Solana as well. You want to do like 3 stocks, 3 cryptos, or you want...
Solana.
So we got 3 votes for Apple. We'll rather 4 votes for Sol. Okay, we'll do Apple first, and then we'll do Sol.
Okay.
Sol is going to be an interesting one. I can't wait to see what you do for it.
I'm excited. So yeah, we actually did do this one.
Yep.
Prior in our last live call, actually. So let me just actually clear this chart off, and we'll do it starting fresh. We'll go to a daily time frame just because we need to see a larger picture here. Okay, so we had a corrective move here, obviously. Very, very impulsive moves from Apple. Wow. Yeah, I mean, when people were saying up and to the right forever, they weren't kidding, right?
That's the motto, bro. Yep.
Yeah. Okay, so you can kind of see. So how I think I would do this is we're in wave 3 right now. What do you think, Austin?
I don't think there's any other way to look at it, right? It's too impulsive.
Right.
And that's kind of, I think, what anybody that's familiar with Elliott Wave would say to you.
Oh yeah, I can see this. I can see this now.
Yeah. So what does that mean to you, right? That, how much higher could wave this massive wave 3 go? Well, we'd have to use Fibonacci extensions. But it's definitely no doubt about it that we're in a wave 3 for sure.
Yeah. So I just wanted to highlight this for you guys, touching more on subdivisions, right? So this is on a lower time frame. Like it's a little bit harder to see right now, but if you actually drop down to a lower time frame, this is the wave count for wave 1. And this will be the overall count for the first wave on the higher time frame. And then this ABC is actually wave 2. So I'll separate these by degrees. Sorry about that. Yeah, so 3 is going to be up there. And I really hope you guys can start to see how this all comes together in a really, really amazing way, right? Because we can clearly count out 5 waves in wave 1, which was exactly what we'd be looking for. This was a corrective move that happened prior. And then we started wave 3 here. So to me, it looks like we're in wave 3 of wave 3, actually. So we have wave 3 up here. We don't really know where that's going to end exactly, but we do know that we have wave 1 completed of wave 3. Could this be considered wave 4? Yeah. Super extended 5th wave if that's the case. I mean, I can see an ABC in there. There's a zigzag that I can see. So we could label that. That could also be, yeah, so that's actually a subdivision of wave 3. So that's not going to be the high of wave 3. That's just a lower time frame count of wave 3, which I hope that makes sense. Essentially, what that means is on a lower time frame, this is wave 3 on a higher time frame. But if you break it down and you want to count the 5 waves in wave 3, this would be probably wave 2. It would be wave 2. So where can we expect this to end? Wave 3 to end is a great question. We can measure from the high to the low of wave 1. And so this is a fantastic example. Whoever put this in, thank you. My next price target is going to be at the 234 level for Apple. And then we can even utilize some trend-based fib extensions to come up with a fib cluster. So we did reach the first take profit zone. My first take profit zone would be in this area. You know, this is a pretty easy to spot fib cluster that I would put. And then my next take profit would be at this level, 234. Yeah, so I hope that that makes sense. But remember, that's actually not the high of wave 3. That's just going to be wave 3 of wave 3. So wave 3 will most likely end higher. But just to make that a little bit more sense, I'll draw it out for you. This is wave 1 on a lower time frame of wave 3. This is wave 2 on a lower time frame of this higher time frame, wave 3. We'll then go to that level and then have wave 4, which is most likely going to be a little bit more open and longer time period because you can see how short wave 2 is. And remembering the rule of alternation, wave 4 is most likely, remember, most likely, not for sure, most likely going to be longer in time and in price. So once wave 3 is finalized, we can actually come up with some exact price targets for a reversal on wave 4, but that is when we'll head higher and finish wave 3 at this level, which is the higher time frame wave 3. I really hope that makes sense. I know I'm talking about a lot of things, but
100% makes sense.
Cool.
To me at least.
Yeah. So cool. That's Apple. My next price target to answer your question would be 227. So let's do Sol next.
I think you may have an easy time reading this one. It's very cut and dry, kind of. I think where it is.
Cool.
Yeah.
Okay, so we obviously have an ABC corrective move right here, right? From its ICO. Very clear. And then we have, this is probably a lower time frame wave count of wave 1. My assumption, looking at this? Yeah, definitely. We're in wave 3. This thing's going to pump. This thing is going to go. We then have a clear ABC move, right? This will be a flat. Look at that. Look at these examples. You guys are killing. And then obviously wave 1 starts here, and then we have a move higher. And now we're in wave 3 on our higher time frame wave count of wave 3. That's crazy. This thing is going to go so high.
Yeah, I mean it's gonna go to uncharted territory for sure. It already is, but
yeah, but I think this thing is going to go an incredible distance, honestly, just looking at this chart. So this will be our count. Yeah, that looks beautiful. That looks really good. Is this the same thing you had, Austin?
Yeah, more or less. Yeah, it's a very, like I said, it's very cut and dry, and it's very kind of, even though Sol is a volatile asset in crypto, it's pretty not volatile. It just kind of follows its line and kind of does what it does.
This lines up with my crypto thesis too. It looks like we might be finished wave 3. I'm not gonna. I mean, if we have enough reason to call the top here, if we see some more confluences, then I will call the top, make that bold call. But right now, you can obviously see a reason why we would end wave 3 right here. Remember, this is just wave 3 of wave 3. But yeah, so here's a fib cluster I would use.
Logan, not to interrupt, but just some quick thing that we didn't go over. What tools are you using on TradingView to utilize Fibonacci and Elliott Wave? Yeah.
So in this third section on TradingView, you can find it. Fib retracement, trend-based fib extension. These two. I have them starred. I also utilize the fib channel sometimes. And then for Elliott Wave, it is in the 5th box. And as you can see here, we have the ABCD pattern, which is the Elliott Wave count. Elliott Wave impulse wave, which is 1, 2, 3, 4, 5. And Elliott Wave triangle, which I utilize sometimes, depending on it, obviously. Also, we have here the ABC. And also
And also, there's other Fibonacci tools that are like. There's actually a lot of really good stuff on TradingView. Logan, where's the spiral? Because remember how we spoke about like how a lot of things like our Milky Way galaxy is a spiral. There's many flowers that show the spiral. Waves in the ocean show this. There is a spiral pattern on TradingView.
I don't know where it is.
Maybe it's not showing for you for some reason, but
here.
There it is, right? Fib spiral, right? So if you guys, we don't typically use these tools, and I've talked to Logan about it, and just because they're not a part of our typical agenda, but there's definitely a use case. Anything related to Fibonacci, anything related to this kind of stuff can be utilized, right? But it's just a matter of utilizing it properly. That's all. So
the Fib spiral calls for a $2,000 Solana.
I mean, hey,
let's see.
I've seen weirder things.
Yeah, but so just for wave 3 of wave 3, I am expecting price to reverse in the near future, either at this level that we're at here, the 161.8, and then we can obviously expect wave 4 to either happen like this, and then continue higher to finish wave 3, complete wave 5 of wave 3, and or we can obviously expect this to come back up. Come back down a little bit. Again, rule of alternation, super short wave 2 in terms of time and price. So maybe a little bit more drawn out wave 4, and then a continuation higher to complete wave 3. Cool. So that was 2. We have a couple of votes for CLF. Can we confirm if that's our last choice for the evening?
Yep, CLF.
Okay, let's do it. So far, 2 great examples.
Thank you.
There's a lot of CLFs. Cleveland Cliffs Incorporated?
Yeah, Cleveland Cliffs.
Yeah, that one. That one.
Cool.
To the moon.
To the moon. Let's see. Okay, so we obviously, wow, look at that zigzag. Super obvious zigzag. Let's go to a higher time frame. Okay, so to me, what this looks like, Austin.
Yeah, so I was just about to say, this is one that you would look at. This one would be a little bit more complicated, in my opinion, to kind of decipher where we are, right? As I said before, Solana is a very easy thing to pick up on as to like where you are. But yeah, this one's a little bit more complicated. I would say, obviously, that big run up that we had is obviously an impulse wave, and then that obviously led into a zigzag pattern. But it's a matter of finding out where are we now. To me, it kind of looks like we are in the process of forming some sort of 5-wave move to the upside.
Good thing we can figure that out.
Yes.
So, let's see. Wave 4 ends right here. Okay, so this is valid. So this is wave 1, wave 2, wave 3, wave 4, wave 5. And then we have, let's even break this down farther. Let's make sure we get this right. So let's go over here. So we're looking for this overall move. We're looking for a 5-3-5 pattern in here, right? So see. So this is not the end of wave. This is what I'm seeing. I mean, either way, this will be an ABC, but I'm just debating if wave A is here or here.
That seems a little bit more likely what you have right there.
Yeah, I think so too. Okay, so let's look. Do we have a 5-3-5 pattern in here? I mean, a super clear one, right? Where does wave 4 end? Wave 4 is ending. No, that would be wave 4 would end right here. Interesting. So this is a more complicated corrective move, actually, right here. So we have 1, 2, 3, 4, 5. ABC. 1, 2, 3, 4, 5. A, B, C.
You guys keep in mind how Logan's breaking this down, right? He's using different time frames. He's looking at the chart in different aspects, right? Because it's not always clear cut what some waves are, right? Sometimes it's even subjective, right? You could argue there's different wave counts that would both be accurate sometimes, So it's a very, I've called it an art form before. So just watching Logan kind of pick apart this is what you should be absorbing and kind of watching, because that's going to help you a lot.
Okay, so So that might have been confusing. I went a little in my head there. I was quiet. But we do have a complete corrective move here. Completely broken down into the subdivisions on lower time frames, right? Remember, we're on a 4 hour right now, but these are more likely 1 hour or even 30-minute structures that we're looking at. But overall, they come together to complete this corrective wave, which is what we needed to happen, right? So this actually solidifies my thesis right now that we are in a corrective move, starting that corrective move on CLF. So let's see, where are we now? It looks like we're actually about to experience a corrective move. That's where I'm going to place my bets, but it'll be wave 2. So remember, we're looking at a lower time frame count right now of wave 1. So on a higher time frame, you would consider this whole thing wave 1. There we go. There it is. So this is wave 1 on a higher time frame, and this is the 5-wave count of wave 1 on a lower time frame. The reason I say that we are going to experience a corrective wave soon is because this right here, this pattern, is known as an ending diagonal, and all an ending diagonal really is a wedge that forms in wave 5. And you'll actually notice, if you do this on your own and do some homework, that we are experiencing ending diagonal on the DJI right now, which is a really, really interesting topic. So we can probably draw that here. I might even connect this.
Right. That's yep.
Yeah. I like that more. So now what I'm looking at on CLF is a little bit of a move lower, right? But then obviously you're going to see wave 2 play out and then wave 3 play out, which is going to be the most impulsive wave, if not wave 5. So wave 2 is going to play out in an ABC format. And then we'll see wave 5 play out. So that's my count, which I'm very, very confident in it just because we could break it down so detailed and really get into it. And all of those counts are valid. I didn't obviously go over every single rule with you guys tonight, but keeping them in my head, this is a valid count. This is definitely the
That's
count.
extremely valid. And I think the more that you kind of zone in on that wave 5, the more obvious it looks, right? It does look like we want to come down a little bit more. And it would be interesting to see what would happen if we did overlay some fib levels on this.
We absolutely can. Where would you like to overlay them? Actually, we'll overlay them
Anywhere. Well, yeah, you could do a little wherever you feel.
Oh my God.
It's over. It's over.
Oh
it's
my
over.
God.
It's over. Making a lot of people in here upset right now. Everyone long on CLF.
Yeah, so like right here is my fib cluster for take profits, and we obviously reached one of those levels already. And
Right
this
now, so-
right here is why I love Elliott Wave theory and Fibonacci.
So Logan, what would you say the probability of this pattern being invalidated in is to be like what's something that could go wrong here that could go against your thesis?
I mean, the only thing that could happen the only thing that would invalidate this thesis is for some reason CLF just starts pumping. I don't see that happening. I mean, obviously, if we're just looking at this, breaking it down to the most basic price action, right here, you're obviously thinking about this. This is super impulsive, wave 3, right? Lots of buyers, lots of upward momentum. Wave 5, clearly an ending diagonal. As you can see, prices are stalling. There's not as much bullish momentum. It looks like prices want to fall over.
I agree. I 100% agree. So
Now,
if there was
sorry, I just want to bring up this last point.
Yep.
If anybody is long, I would hope that you're doing it on either a super long-term basis or a short-term basis, because what could totally happen is we get this breakout right here. We get this breakout right here, and then we come back up. We retest this as a double top, or even come back to the higher point, touch this level, and then come back down and complete wave 2. There's no saying that wave 1 is completely over right now. We could totally see a double top or an even push higher to this resistance line and then a move lower. But overall, on the higher time frame, I do think that we are going to come to a conclusion of wave 1 and head into wave 2.
That is exactly what my chart looks like. So I found this just from the triple bottom. It's formed on that really pretty short time frame for the past 3 months or whatever. And I'm playing that breakout of that little wedge that you have drawn above exactly the same on mine. I found that guy. I'm proud of myself for that one. But yeah,
good fun. And that could totally play out. I would not hold if we get to this level, these levels that we were just highlighting, I would probably get out of my contracts if I was in this. I'm not even gonna say probably. I would get out of my contracts if I was in this.
Yeah. Okay. I guess I'm playing the closing below the triple bottom or just breaking above that wedge. And then I think we'll be able to pump for maybe a little bit, and then we see that corrective move.
Yeah, I mean, obviously, this is a fantastic opportunity for both long and short positions. We can break this support bound of the ending diagonal, and then you could take a short trade, or we could break above, take a quick long, and then take a short. If you got in, walking through this hypothetically, let's say we caught a move up here to the upper bound of this resistance, and then you took a trade, this would be the highest probability short trade, because you could get in up here, set your stop loss right above this Fibonacci cluster that we had, and then just wait for wave 2 to play out. So Austin, I know you were about to say something. Sorry.
I forgot. I got hypnotized by your wonderful words. So
cool. Well, yeah, that was our 3 examples for the night. Now we can move into questions.
Oh, okay. I remember what I was going to say, and I guess this falls under a question that maybe someone could get value out of. So like I said, right, if there's some fundamental news, right, I'm going to use CLF as an example. If there's some fundamental news, right, like Amazon wants to start working with Cleveland Cliffs Inc., right, and it pumps to some absurd number, then you would just reevaluate your entire wave count, right? That's how you would go about it?
It is, but I think the likelihood of that happening is low.
Right. I'm not saying. I think that your thesis will play out. I'm just saying, right? Because sometimes things get invalidated, right? And you have to kind of restructure things and whatnot. So, there's no. I just want to say, right? There's no guarantees. It's not guaranteed that CLF is going to fall, but it's likely. Yeah. But it's likely. It's not guaranteed. It's likely.
Trading is guaranteed. This is just my way and my favorite way of shifting the odds in my favor.
Correct.
Thing to add on thesis is that you have also other indicators as well and theories. Like right now, I can see immediately you have a bearish divergence, like immediately telling from the RSI to the chart of the movement to higher highs. And if you look at the RSI, we're making a bearish divergence of going lower as well, so, while the stock is going up. So it's very interesting.
Wait, so who else in here? Oh, sorry, Austin.
No, go ahead. You're fine.
I was gonna ask about who else was bullish on CLF. Was there some other chart I was aware of, or was it just the one I posted like a night?
Yeah, no, I don't. I've never really looked at CLF too much. I think I did we might have done a TA on it in a live call previously, and I came up with that same. You see where that red box that Logan has right there? That's kind of the area that I had for resistance of it. I did speculate that we could maybe double top or go back up to that top in the short term, but ultimately, right in the midterm, I think we will see that pullback from CLF in some way or another. So. Yeah, I don't know what you had though. I don't think I saw that.
He said he had something similar.
Gotcha.
Yeah, I posted some TA in stock chat, but yeah, no. All right, well, thank you guys.
Of course. So, any questions, guys? Throw them in chat or open up your mic and let's talk.
Yeah, and no question is a stupid question. Please, ask anything.
Especially when you're talking about these topics. These topics can definitely get in depth, so no question is a stupid question.
So I actually do have a question. Basically, when you drew the Fibonacci on this specific chart, you got a reaction out of everybody kind of saying like, yeah, it's over. What was that giveaway? Like, what was it that you saw that maybe, I'm not too familiar with Fibonacci, so what was it that you saw that kind of gave away that it could be over?
Yeah, absolutely. Great question, actually. So remember from our slideshow when Austin was going over the Fibonacci extensions, which we use primarily and provide the most confluence for our trading setup. That would be the 127.2 and the 161.8. So when you draw from the low or to the high of wave 3 from the low, you can obviously see that the 127.2 extension of wave 3 lines up with is exactly where we are now, right? So that is what got everybody's attention because of the fact that this is one of our higher probability Fibonacci extension levels, and that is the level we reached.
Okay, perfect. I see.
Of course. Good. I'm glad. What's up, Jacob? Good to have you in here.
Hey, man. How's it been so far?
I think pretty well. I think it's going pretty good.
Let's go. I'm sorry I couldn't come a little earlier. I'm on my phone walking home right now, but just wanted to listen in.
Cool. Any other questions, fellas?
Yeah, I don't know if I missed this, but how do you decide like the time frames you're looking at? I think you mentioned it, but like I might have missed it. Like the time
Well,
frames to do this, yeah.
yeah,
How do
that's a
you
great question.
approach it?
I think the most important thing that I do is starting from it's called a top-down approach, right? So you start with a higher time frame and you kind of identify where we are in the overall wave structure, what we're looking at in an overall time frame, the highest macro structure that we're looking at, and then you can break it down with those subdivisions. So you could literally go from a monthly chart, find where we are, drop down to a daily, draw where we are, drop down to a 4 hour, drop down to a 1 hour, keep on dropping down and keep on breaking it up into its subdivisions. And you could take a trade based on, like, theoretically, I'm not saying that this is what I would do. You could take a monthly trade on a 1 minute chart if you broke it down close enough. So whatever time frame you're looking to trade, whatever is more suited to your, like, how often you're trading, you know, what hours of the day you're trading, you can break it down into that time frame specifically. But I do start with the higher time frame structure because you obviously always want to trade in the direction of that structure and where we are in that count.
Yeah, adding on to Logan's time frame education material. We have education material on time frames as well, because time frame is really important on how you place your trades and how long you want to hold that trade for. Because you start with you start from the outside of the box and move in. Because the closer you move in, that's when you find your entries and exits as well, depending on how long you want to hold the position of sorts.
And you bring up a really great point, actually, how I yield my highest risk reward trades. And just for example, if I find a wave structure on the 4 hour, but I can go find an executable trading pattern on the 1 hour chart that is in the direction and is, in the same action as that higher time frame trend, it allows you to get a really small stop loss with a really, really high take profit because you're able to enter on a lower time frame on a higher time frame structure.
Okay, thank you. That makes sense. Mm-hmm.
Perfect.
So I have a question related to that. So I was looking at bull trades, and then I saw that he usually has a lot of riskier trades, and so you'll see like he'll update that his options play went up like 100%, but it went down 50%. So how do you account for that with like the 10-20% that Anderson suggests?
So his risk management is different from mine. That's the thing. He wants you to build your own risk management of sorts. I don't know how his risk management. I know he has a chart he put in stock chat every time. It's like a what's it called? It's a spider web type of chart where basically it goes like, do you want to take profits? You want to hold still? Do you want to set stop loss? Yes or no? And so forth. It goes downwards. His is different compared to mine. So like, do not follow my risk management compared to his. It's very different how the way he trades compared to me.
You need to develop your own risk, right? You have to. It's very subjective from person to person. So as you go along this journey as becoming a trader or pushing further into your trading career, you have to kind of develop the risk tolerance that you think is appropriate for you in your portfolio. And it's very subjective, and it definitely differs from person to person, right?
Yeah, for sure. And I just want to briefly touch on that. I think that highlights a really important point, whereas, Bull is a fantastic trader. He's giving out calls. This live call right here and my calls I don't really give out calls, right? I post TA and trade setups that I'm going to take because of the reason that this shows you exactly where your stop loss is going to be. So if you're going to incur that 50% drawdown, you're expecting that may happen, So I think that may provide a little bit more context to your answer as well.
Perfect, thank you.
And I think also just really quick, to sort of give a quick example of it, Cody, one of the other analysts, his channel's CM, his risk management strategy is one that I believe is closer to how Bull manages his risk. Let's say, we set a 20% stop loss, so we'll take a $1,000 position with the expectation of, losing $200 and then cutting it. For Cody, and I believe Bull is very similar to this, he doesn't like letting things run to zero, but he does hold for a long time. Instead of risking $1,000 in a trade and then expecting to pull out when you lose $200, they'll only put $200 into that trade, but let it fluctuate basically to 0%. So at the end of the day, you still lose, let's say $200 if it's a losing position, but it allows for a lot more wiggle room in terms of your entries, because you can buy the contract, see the setup, let it go down, let's say 80%, and just hold through, knowing that you're only down like $160 instead of buying 10 contracts with $1,000 and then being down a significant percentage of your account. So that's just another method of risk management that I know Cody uses, and I think is very similar to Bulls. So it's just another approach, and the more you trade, you can kind of figure it out for yourself. I traded like that for a little while, but have kind of transitioned over. So it just sort of depends on your situation and what fits your trading style a bit better.
And also, it's your portfolio size, because these people have really big portfolio size, so that's why.
Yeah, that's a big one too.
They can incur a lot of risk compared to people who have small portfolios.
Yeah, cool. So Davo asks, what time frame would you recommend for swinging a stock regarding Fibonacci and Elliott Wave principle? My answer for that would be, it depends on what time frame you're looking at and what time frame you're analyzing the chart on. But since you did say swinging, my answer for you will be, it really depends on what you consider swinging. For me, it would be like a 4-hour or daily chart, but it could even be a weekly.
Yeah, that's what I have too, 4 hours. In my time frame strategy I have in my channel, I could re-upload it for you guys. I break down the different time frames. The 4 hours to the weeklies and daily is the range I would swing trades on.
Cool.
Awesome. That was a really great presentation. I hope everybody here kind of has a better idea of Fibonacci levels and Elliott Wave principle. Perhaps you guys can go off and utilize these things on your own now a little bit better. Right?
I hope you guys can. If you guys have any questions regarding this after today, please send a message in currency chat or stock chat, and we're happy to answer.
For sure.
But
for sure.
Any last questions before we sign off for the night?
Actually, I have one. If you guys want to stay for just a bit, do candle structures, let's say you're looking at, I don't know, the weekly on the SPY for the past 5 years or something. Could one candle decide whether you're at the end, or confirm the fib level or something? Is there any merit to how a candle is structured, and if it can
absolutely
predict anything?
XRP is the prime example for this. If I wasn't exactly monitoring the charts when this happened, but if I saw this doji on the 4-hour at the 127.2 extension, it would be game over. Just because
what's a doji? What's a doji?
Say that again.
What's a doji?
Yeah, so this is a doji right here. Let me just highlight it for you. But a doji, what it is at a bare bones is indecision of price. So as you can see, if you're going to look at this on a 4-hour chart, this is obviously the open and the close were at the exact level. But within this 4-hour, price went up, got rejected. Sellers rejected that higher price. Seller moved lower. Buyers rejected that price and then closed at the same level. So this is an area where you can expect a reversal. So that is why I think a doji is a really, really good example, actually, of where you can use that in confluence for your levels to say that's a really good ending for this level, rather than waiting for more confirmation.
Wow. Okay. And could a doji be? Is there any possibility it could have the slightest little bearish or bullish tick? I don't know. O3 sent a Netflix TA in the chat, or just Netflix chart, and it showed that giant blue candle, and then a little upside down hammer kind of in the actual candle itself, just not including the wicks, is really small. Could that be counted as a doji, or is a doji specifically just completely neutral?
Yeah, so here's another example of a doji, which answers your question, right? There was a slight tick up in this, right? Because the open's right here and the close is right here. But this was still be considered a doji. It doesn't have to close at the exact same level, but it does have to be close to it.
I see. Thank you.
Of course.
There's a whole list of different you can read candles as well if you want to. There's a whole pattern cheat sheet you can find online with all the different pattern cheat sheets for candles too.
Yeah, I recommend looking into them. I use them literally for every single trade entry that I'm taking. And I'm sorry to cut you off, Andy, if you were going to say something else, but I actually just wanted to bring this up because this actually brings another great point. You know, you could see that doji and you could say, wow, that's a really great confluence for this level. You could also wait a minute, wait for the next 4-hour close, and you see preceding that doji is an engulfing candlestick, which confirms our reversal. So an engulfing candlestick is exactly what it sounds like, right? It's a candle that engulfs the last one. These are obviously found, especially after dojis, because dojis essentially don't have any real body to them. But as you can see, we confirmed this level. Buyers rejected it, sellers rejected it, and then as you can see, we confirmed that this was our high by starting our reversal with this engulfing candlestick right here.
Okay, and by engulfing, does it mean it engulfs the entire wick too in that direction, or just the body of it?
Yeah, so that's a great question. It does have to be, like, this is an engulfing candlestick. It has to engulf the wick in the direction that the candle moves, right? So, like, this passes this wick. If this candle closed here, it would not be an engulfing candlestick.
Okay, got it. Thank you.
Yeah, of course. So here's another example of an engulfing. This is not an engulfing because this wick is higher.
Okay.
Yeah. Cool. Okay. One more question, Max, if any.
All right, Logan. I mean, I think we could wrap it up here.
Cool. Awesome. All right. Well, again, thank you everybody for joining, especially on a Saturday night.
Yeah, we appreciate it, guys. We really do. We hope you got some value out of it, We do these these are bi-weekly calls, so what's next Saturday? The next Saturday we will be doing it. Do we know the date? I should probably find that out just to tell people. But we do these every 2 weeks.
So the 25th.
The 25th will be our next one of these, and we will come with a different set of topics. We might do a vote to see which topics you guys would be interested in. But so definitely be there. You know what I'm saying? We put a lot of work into these, and yeah, right on. So
be there, be square.
Be there, be square. That's for sure. All right, guys. Well, thank you very much for attending, and we'll enjoy your night.